If you've ever had issues with credit scores, this is the video for you. We're going to be covering a couple quick and easy ways to repair your credit. Now, over 35% of Americans have fair to poor to very poor credit, which is incredible. It is going to make everything in your entire life not only harder to acquire, but also more expensive if you do. When you look at having A+ credit, you might get 6% on an auto loan. If you have D or C credit, you might be looking at 12, 18, 20, even 25% when it comes to the rate you're going to get an auto loan. Also, the probability of getting that auto loan or being approved for that auto loan might not be there either. They may look at your credit history and look at credit problems and say, nope, we're not going to go ahead and lend to you. And unfortunately, you're not going to be able to get a vehicle, which you might require for your family, getting to work, things of that nature. So you have to make sure, guys, that you can rebuild and you can adjust your credit score, which we're going to go over how to rebuild it. Number one, starting with the credit report, go to annualcreditreport.com. Make sure you pull your report. Now, this report is not going to yield a score, which is okay. We don't need a score at this point. But what you're doing is you want to go through there and you want to make sure that everything that is reported on your credit report is accurate. If it is not, there is actually a way that you can dispute the items on there through annualcreditreport.com, but you can pull one every single 12 months. You pull one from each bureau. Now, there are 3 different credit bureaus that we know of. There's Experian, there's Equifax, and there are TransUnion. You need to make sure, again, that the information reporting on your credit bureau is correct. Second step, guys, really disputing the errors. This is a huge one. You have a right to dispute anything that is reported on your credit report, but you'll also know exactly where you need to improve your score, looking at if you have collection accounts, what can you do to pay them off? Most of the time, creditors will settle for far less than what is owed on the credit report or on collection accounts due to the fact either one, they're not going to get any money at all, and that account is literally going to sit in collections forever without you paying anything, or two, they're going to settle that account. That way they can at least get some reimbursement. They can close it on their books. It's good. It's clean. It's gone. On your side, it can start aging that credit. Now, what makes up your credit report? This is a very, very big area, guys. The biggest part of this is the payment history. 35% of your FICO score is your payment history, meaning that you make on-time payments and you make on-time payments every single month without being delayed. Now, you have to be careful with this, guys, because a lot of payments do have grace periods on a 10-day grace, a 15-day grace, whatever it may be. But some creditors are very, very particular, where if you extend even 1 day outside of the grace, they can report you late. Second part of this is the amount owed. 30% of your FICO score is the amount that is owed. Now, this, of course, is huge right now because we are approaching, as a nation, $1 trillion in credit card debt, which is just absolutely unheard of. But the amount owed is really the relationship or the capacity of the cards. So how this works is, let's say you have a card with a $10,000 limit, you owe $5,000 on that card, you are at a 50% capacity for that card. So what do they say in that point? They say, whoever it may be, you're living outside of your means because you are supplementing your income with credit card debt and you are carrying high credit card debt. Now, credit card companies or FICO scores want to see 30% utilization or lower, which means out of that $10,000 limit, you want $3,000 or lower. When it starts going above that $3,000 mark, it is going to negatively affect your credit. Same is true, guys, the closer that you get to that $10,000 mark. So let's say now systematically you owe $9,000 on that card, you are using 90% of the available balance of the card, and it will have a huge impact on your credit score, and it will drop your credit score. We've seen 30, 50, 70 points that literally carrying a balance on a credit card has done to our members. Now, length of credit, 15% of your score. This again is another big one. This you can only acquire through time. Now, a lot of things like Instant Boost through Experian and a couple different ways say it's super fast and it's super quick to repair your credit. That is not the case, guys. When you look at payment history, when you look at length of credit, that is 50% of your score, which cannot be fake, which cannot be essentially made up in a very short amount of time. If you have 6 months, if you have 12 months, yes, absolutely, you can do a couple things to go ahead and repair and replace some of the poor credit that you have on there, which we're going to be covering in just a minute. 10% again is the credit mix. They do not want to see all credit cards, all auto loans. They want a nice mix of credit. Now, there are a lot of institutions that require a mix of credit to actually borrow. If you don't have 2 trade lines, some institutions will not borrow to you at all, meaning that you got to have a credit card if you have a mortgage, if you have an auto loan, things of that nature. If you are on a cash-only system, again, the tips that I'm going to share with you in just a minute are going to make a really big difference. Now, the final part, guys, the last 10% of the score is new credit. So the credit bureau, 1 or 2 times a year is really average on what you do want to pull credit. However, However, we see people that might do 10, 20, 30 inquiries over the course on 90 days, 6 months, and overall, it damages your credit, guys. Every time that you're doing that inquiry, it is going to drop at a few points. The more well established that your credit is, the less of an impact it is going to have, but overall, it is still going to have an impact when you do pull your credit. Now, a couple of things that I wanted to share, guys. Number one is doing secured loans. So secured lending in general, if it is a secured loan, so it is fixed rate, fixed term, if it is a secured credit card, this is an absolutely phenomenal way to build your credit. So what this does in this case is, let's say you set aside $1,000, that $1,000, you take out a loan for $8,000. So essentially, instead of you being borrowed money on your credit worthiness, you're borrowing your own money. Now, a lot of people might say, why exactly do you do this? Number one, it builds the payment history. That is what you're looking for, guys. So if I set $1,000 aside, I take a loan out for 12 months for that $1,000, I might pay a little bit in interest, but the money that I'm paying in interest to actually build and correct some errors that I had on the credit score are going to fundamentally be leaps and bounds above, because you are going to have 12 months of on-time payment history based on the loan that you borrowed. In the same manner, a lot of places will also do secured cards, where if you do not qualify or are not qualified for a regular credit card, a lot of places you set aside $500, they will give you a card with a $500 limit. Now again, this is building your length of credit, this is building your payment history. This could also affect the amount that is owed on the cards, because if you have a card that has a $500 limit, and let's say it is the only card that you have, again, that 30% utilization is going to fill up very quick on a $500 card. However, it really looks for two things with that secured card. Again, number one, it looks, was there a charge on that card? Number two, was there a payment on the card? Number three, what is the amount that is owed on that card? So again, if you're looking to rebuild credit, guys, if you get a $500 secured card, use it for one thing and one thing specifically. Most of the time, I advise people to just use it for gas. Every time you get gas, when you have the money, when you get paid, pay it off in full. It is going to create a payment history. Every single month there's a purchase. Every month there is a payment. It is going to keep the amount owed at zero, meaning you are going to owe nothing on your card. Do not carry balances on these credit cards, guys. It is going to mess with the amount that is owed. In addition to that, is you're going to pay interest on balances that you're carrying. Credit cards are super expensive. They are the most expensive form of borrowing within the United States. Some of that run 20, 25, 30, even 35+% when it comes to really going through and having balances and carrying balance on that. So some of the quick tips, guys: payment problem history, you can look, late payments, unfortunately, you really can't take off there, but charge-offs, collections, things of that nature, you can clean up on your credit report. Problems with how much you owe, this is really looking for either a limit increase or having a systematic plan through budgeting to pay down and pay off those credit cards. You can also use consolidation loans or personal loans to go ahead and consolidate and pay off those balances. Length of credit, this is one from a credit perspective. You just have to have time, guys. You also do have to have credit open to build that length of credit. You want to make sure, this is why a lot of people have said, if you close credit cards out, can it affect your score? Absolutely, because you could be wiping out your length of credit. You could also be messing with the amount that is owed. So over 70% of consumers say that credit scores in credit reporting is very important to them. If you have damaged credit, it is an easy rebuilding process, but similar to investing, guys, it just does take time to rebuild and reassess that credit. So all right, guys, so that'll do it for today's video. Let me know in the comments what you guys think, and as always, thank you guys for watching.